Are we live? It says we are. Okay, let's double check because the paranoia is strong in this one. That's me. It's strong with me. Let's see. Good morning if you are coming on here, if you're watching it, whether you're joining me live or you are watching on replay. Welcome, welcome, welcome. Happy Thursday. I am not seeing it pop up on Facebook. Live, great. As long as we're there, we should be everywhere. There we go. I froze. And last week I jumped on here and immediately, like within 30 seconds, my internet went out for it zapped, it just kind of went out for a second and it screwed everything up. So good morning. Happy Thursday. Let me get my face off over here. I don't need to see myself. I do need to see my outline. Let me pull that up. All right. Whether you're watching live or you're watching on replay, I always love to know where you're watching from. I am in Colorado. I'm in the Denver area. If you're in Colorado, I'm in Aurora. Our offices are in Greenwood Village, but Colorado is where we're at. And if you're new here, you're probably wondering why you're talking to me. It's funny. My thing says fractional CFO and certified tax coach. I'm actually, I gotta change it. I mean, that is what I am, but that's not why I'm here. I'm Bree Beers. Hi. I am Bree Beers and Associates in Denver, Colorado. We are a tax advising firm. We work with clients across the country, except for California and New York. Sorry if you live in those states. Till we find a specialist for those states, we're kind of staying out of there because you guys' states laws just keep getting complicated and more complicated, and we don't want to screw things up. But why am I here? Who am I? I am a CPA. I'm a certified tax coach. I'm an advanced tax strategist. I'm a fractional CFO. All those things mean that I have either passed a test, an exam, or I've taken a class, right? I've taken a course to give me some extra knowledge and oomph to help you guys. Where I really hang my hat, though, is I have 20 years of experience in accounting, over 20 years now. I have 12 tax seasons under my belt, and I have 7 years as a business owner. So all of these together really gives me the background, the knowledge, the expertise to help you guys and help advise you guys. And what I've been doing for probably the last 6 years is really digging into our tax code and our tax laws and figuring out how to apply those to the everyday Joe, right? So how do we so what I'm working on now is how do we take all that tax code, all that learning that I've done, and how do I share it with you guys? How do I get that out of my head and into your guys' toolbox? Hence these weekly trainings. So welcome. Today we are talking about travel. Travel is probably my favorite one to talk about because it's the most underutilized and underreported, okay? We get so many business returns, new clients that come in and they have no travel expense. And when you're first starting out, if you're a very small business, maybe it's a side hustle, I get it, right? But if you have a business and it is your full-time gig, right? If you're fully self-employed or you have a business, therefore, let's assume you have the funds coming in to travel for business, you should be, all right? It is legal, it is legit, it is a great way to get some work done that we're gonna talk about today. Like what can we do work-wise that allows us to travel, but also pay, have the business front the bill, all right? So anytime when I'm talking about different tax strategies, we always talk about qualification, documentation, and reporting. All right. And today with travel qualification, that first step is really where you can maximize this line item deduction. Okay. Really understanding what you're allowed to do and taking full advantage of this tax strategy is the most important step. All right. Next is documentation. And in this step, it's the lack of documentation where you can get in trouble if you are audited. All right. And so we're going to talk about what you want to make sure you're documenting to make sure that if the IRS ever does request that, to look at your business return, you're able to supply them with what they need to legitimize these travel expenses. And the last one is reporting. And the reporting part is the easiest part. All right. That's the simple part. We're good there. All right. So qualification, this step is the most fun. It's the most exciting to talk about. And for me, I don't know about you guys, but and what this step does is it says, okay, Bree's telling me I can travel for business. That's great, but what can I do? Like I don't, I get a lot of clients who are like, I don't need to travel for business. I don't, I have no purpose. All of my clients are here. So that's what we're going to spend a lot of today talking about. All right. So the first thing we want to talk about is what could be deductible. Right. Let's start there. What are the expenses that actually could be deductible when we are looking at travel expenses for our business? All right. And when we're traveling for business, what we can deduct our airfare, we can deduct our hotel, our lodging, Airbnb, wherever we're staying. All right. Rental cars, parking, taxis or Ubers or Lyfts, however you're getting around town, trains, buses, however you're transporting from point A to point B, that can be deducted on your tax return. Tolls, all right? So anything that you're doing, anything you're having to spend while you're away on this travel for business can be deducted. We do talk about meals as well. We're going to circle back around to meals because it is treated differently. If you watched meals last week, you know that the deductibility of meals is different. It's 50%, not 100%. But your meals on a trip are still deductible at that 50%. All right. So again, we get so many, we see new clients that come in, they have no travel deductions on a full-time business return. And this is a huge opportunity to move those post-tax dollars to pre-tax dollars. If you've been with me for a while, we talk about these low-hanging fruit strategies, right? These ones that really what we're doing with these strategies, and travel is one of them, is we are taking these dollars that are going out of our accounts anyway, right? We are spending this money, whether, we're spending this money, period. So how do we take those dollars that are coming out personally on a post-tax basis, right? We've been taxed on them and now we're spending them. How do we move those dollars and make them pre-tax? Move them into the business, make them a tax deduction, and make them non-taxable spending dollars, all right? And travel is one of those ways. So with this strategy, you guys, it doesn't require that you implement any, specific documentation. You don't have to implement a new strategy, right? You just have to take the money you're already spending, or maybe you're already planning on spending, or you could already be spending, and moving it from your personal to your business. All right. And that's what we're going to talk about, how to do that today. All right. So we're going to talk about, okay, how do we come up with business travel, right? What reason can we travel for? All right. And there are many ways. A lot of the easy ones that we think of is meeting clients. If we have clients in a different state, we have VIP clients on the East Coast. We have some up north. So meeting with a current client, that qualifies your trip to be a business expense. Meeting with a vendor, all right, whether you are talking about a contractor, maybe I have a VA and I want to go visit them for an actual in-person meeting, that is a business trip. Maybe I am in the business of making things, right? So we have a client, I'll tell you, we have a client, they're in the stone industry. Right? They make tile and they, put it into big commercial buildings. But all of their stone, not all of it, but a big selection of their stone comes from Italy. So they have to travel to Italy on a regular basis to examine the stone, inspect it, make sure it's exactly what their clients want, make sure it's in good condition. So they get to travel to Italy on the business's dollar. All right. So meeting with clients, meeting with vendors, attending a conference or training event. This is an easy one, okay? As long there are conferences and training events for every single industry, every single niche, okay? So if you're at the point where you have the money to spend, a lot of times you guys, these conferences are a couple $100 for, 2, 3, 4, 5 days. All right. They can be pricier than that, but you can find some in your niche that are, $300, $400, $500 for the conference. Of course, then you have to get yourself there, all that. But these conferences are training events. So if you're in an area where you need continuing education, so many of us take it online now. I know that's me, but I try, as long as my budget allows, once a year to go away to a conference or a training event in person. And a lot of times, especially the bigger conferences, they pick places that are like touristy, right? Like I have a conference next year for my CFO side of the business, and we are headed to Orlando. All right. And I'm going to use that as an example at the end of how to maximize that. Okay. So attending a conference or training, if you have rental property, checking on your rental property, all right, is a business. You make that trip into a business trip. All right. And what we see is we advise clients if they have parents that live out of town, maybe you're older, you have kids that live out of town or grandkids. All right. Could you if you're in the real estate game, could you buy a rental property near your parents or your kids or your grandkids that you then have to, go visit your family and check on the rental property, therefore making part or all of that trip a business deduction for your rental business. There are we kind of mentioned conferences, but you can also I forgot this on my outline here, but one thing we do is we have a mastermind every single year, me and two other accountant entrepreneurs that I've met probably 3 or 4 years ago. If you know Jamie Troll or Kelly Vincent, every December we go away, we meet somewhere for 4 days, and we have a CEO retreat. All right, we're sitting there, we help each other plan for the next year, we review the year before. It's great. Okay, that's a business expense because we're going there. Yes, we drink wine. Yes, we catch up on how our kids are doing. Yes, we do all those things, but the majority of those 4 days is spent working in the business. Therefore, it is a business expense. All right. I see a question. I'm going to come back to that. Okay. I'm going to come back at the end, I think, because I think I might answer your question during the training. All right. So, and then the last way to make a trip deductible is to hold your annual board meeting of directors somewhere else. Okay. If you're an S Corp or a corporation, even some partnerships have this in their agreement that they have to have an annual partnership meeting. All right. A meeting of directors. You don't have to have that in your place of business. All right. You can hold a board of directors meeting elsewhere. I have a client who holds their board of directors. It's him and his son. All right. And it has been for 35 years. And every year they go to Hawaii for their board of directors meeting. All right. And we'll talk about how to combine in just a moment. We'll talk about how to combine business and personal so you can deduct part of it. But they go to Hawaii. All right. You can go somewhere. The cool thing about this, many of us, we are our board of directors, right? I'm an S Corp. I'm the sole, I'm the president. I am all there is, right? But I still, by the standards say, I still have to have an annual board meeting. All right. So I will have my board meeting up in the mountains or on a beach in San Diego. All right. I will never have it here, ever, because I'm missing out on this opportunity to travel, all right, on the business's dollar. So holding your board of directors meeting elsewhere. So now we want to talk about how you combine business with personal, okay? Because this is where you get, I don't want to say you get creative, but you use your knowledge, you use what I'm teaching you, and you're able to take a vacation or plan a vacation for you, your family, whatever, and you're able to deduct part of it under the business. Not all of it. We'll talk about exactly what you have to, what that looks like, but that's what we're going to talk about now. All right. So a couple examples. So let's say I'm going next year, Orlando for a conference. All right. So I'm going to a conference and it's it's Monday, Tuesday, Wednesday. Okay. Monday, Tuesday, Wednesday is the conference in Orlando. All right. And then what we're going to do is my family is going to fly out as well, or I don't know if they are. I'm going to pretend like they are. We don't know if they are, but we'll see. So let's say they're going to fly out on Wednesday, and then we are going to have a family trip. We're going to hang out Thursday, Friday, and Saturday. We're going to hang out, do the amusement park things, do all that stuff. All right. So with that example, okay. So none of my, none of my family's stuff is deductible. Okay. Unless there are exceptions when you get into, when your kids work for you, when your husband works for you, There are ways to do that. That's a case by case situation where you can, take even more of your trip and deduct it under the business. But let's assume they don't. Let's assume it's just me. Okay. So my airfare there and back is going to be deductible, even if I stay longer than the conference. Because the premise of that is whether you stay for just the 3 days of the conference or you stay for 3 weeks, you have to get there and back. All right. So your round trip airfare is fully deductible, yours, okay, as the business employee, business owner. All right. Your lodging, all of the expenses for those 3 days while I'm at this conference are going to be deductible. So all my food is going to be 50% deductible under the meals rule. My lodging, if I have to take Ubers to the conference, all of that. Okay, all of that for those 3 days is deductible to the business. That lodging is so. Let's say my family comes with me. Let's say they leave and I'm at the conference for 3 days and they spend those 3 days having fun. All right. They're staying in my hotel room. And just because they're staying in my hotel room doesn't make it non-deductible anymore. I need that hotel room, whether it's just me or it's me and my kids and my husband. All right. And so even though they're staying in this room for non-business relation, because I need that hotel for 3 days for my conference, it's still going to be deductible. Okay. So let's see. I'm trying to think of other examples of this, of how it kind of, you mesh it together. And the key here, you guys, is just to make sure that you are only taking your legit, the things that are for business, right? The things. So again, we're there for 3 days for a conference. So it's only the meals for those 3 days. It's only the transportation for those 3 days. If I stay 1, 2, 3, 5 days longer, okay, that is the cutoff. After that, that stuff that's not a business expense. That's now a personal. Okay. I see. And about family expense. Elaborate a little bit more for me. Things about are you asking, is that deductible? Are you asking how you handle it? Let me know what you're asking and I'll do my best to answer it for you. Okay. There is, let's see. So one thing to keep in mind when we're combining our business with our personals, because I gave the example of the conference. All right. But what if, okay, so the conference is Wednesday. No, the conference is Monday, Tuesday, and Wednesday. Okay. And what we want to keep in mind, conferences are easy, right? It's an outline. It tells you when it tells you that those are business days. But what if you're meeting with clients, or what if you're, let's say you're making a tour. I have a client in Florida. I have a client I got you. I'll come back to you. A client in Florida. I have a client in South Carolina. And let's say I'm going on a, southeastern tour to go visit my clients. All right. So I travel, let's say I fly out on a Monday. Okay. That's going to be deductible. I don't meet with them till Tuesday. Okay. That's fine. Monday's still deductible. I have to get there. I have to get settled. It's a travel day. A travel day is considered a work day. Okay. So my travel day there is deductible. My travel day back is deductible. In between, working days are going to be generally constitutes 4 hours or more of actually working in a day. Okay. So just keep that in mind. That's not a hard and steady rule. Like if the IRS comes to you, they're not going to ask for your logs. But in terms of trying to make sure we're staying kosher with our laws and make sure we're not taking advantage, make sure you're working at least 4 hours. Okay. And so there's a bonus here. All right. There is a way. And if you checked out, come back to me. All right. So there's a way to make your weekends deductible as well. All right. So listen up closely, because I hope I can explain this well, because this is great. Okay. So if your weekends are sandwiched between 2 working days, the expenses you incur over the weekend now become deductible. Let me give you an example. So let's use this conference again. All right, so the conference is Monday, Tuesday, Wednesday, right? We've already established, great, that's good. But what if the Friday before I go and I visit with my client who's in Orlando? Okay, they're not in Orlando, but let's just say they are. So on Friday, so now we go backwards. So I fly out on Thursday. That's a deductible day because it's a travel day. I go to my client's business on Friday and we have a full working day. We have a VIP day where I'm working with them for, 5 hours. All right. So Friday, obviously a work day. I just met with a client. Okay. And then my conference starts on Monday. I do not have to I have to stay there, right? I'm not going to fly home on Saturday and fly back on Sunday. All right. So I'm going to stay there the weekend. All right. It's logical. It makes sense. It makes money and business sense. Because I have business going on before the weekend and I have business going on after the weekend, those 2 days, all the expenses I incur over that weekend, so my food for the weekend, my lodging for the weekend just became a business deduction. All right. The question I get here, but what about sightseeing? No, because that's not business related. So if you're going to go, if I'm going to go to Disneyland on Saturday, I don't get to deduct my tickets to Disneyland. That's not a business purpose, business expense. But my food for the day and my lodging for that weekend, now deductible because I have business going on before the weekend and after the weekend. All right. So this is very cool. All right. So that's kind of a way to expand those business dollars of your trip. All right. So travel, how do you make your family expenses deductible? Again, this is going to vary. This gets a little more deep into how your business is set up and how your family is set up to work in your business. All right. But if your kids or your spouse work in your business with you, there are ways to then make their travel deductible in certain cases. All right. And this is where you want to make sure this is where you can easily go overboard, right? And be like, yep, I'm taking my kids, so let's take a step back. Okay. Let's say my kids work in my business, which they do. All right. They are they handle my social media. They handle, scanning and filing documents. Maybe my kids are older and they do some of the data entry for bookkeeping. I don't know. My kids don't do that, but giving some examples. Okay, so most of us, when we employ our kids who are under the age of 17 or our family, our kids in general, usually they're doing admin work, right? They're doing some sort of administration or assistant work for us. Okay. And so traveling with them to say that that's business related, like how, so where we can pull a few extra dollars without getting greedy. All right. Is if you're let's say you're doing a team retreat. All right. Let's say, you have a very small team and you guys are going up to, like, I live in Colorado, we go up to the mountains. All right. And we actually, once a year, we go up and we do a team retreat up in the mountains. All right. If my kids are part of my team, then they can come with me. And that is a business deduction because I'm paying for all of my employees. And they just happen to also be on my payroll working for me. Okay. So that's a way, that's a way to get our kids. If you're in rental business, okay, if you're in the business of having a rental portfolio, okay, your spouse should absolutely be on your board of advisors so that when you guys are going to visit the rental properties, all of your business expense is deductible. Okay, so let me step back on that one real quick. So I have a rental portfolio. Let's say I have a rental in where I want to in San Diego. Love to. Okay. I have a rental in San Diego. So that, I'm going to go check on my rental, right? I want to make sure my husband's on my board of directors because then we can both go check on the rental. Okay. And it can be a business deduction under our business. Okay. For both of us to go check on it. Maybe we're going to work on it. Maybe we're going to make some repairs. I don't know. Whatever it is that you're doing. Okay. It looks different for everyone. And again, when your tax advisor, whether that's us or someone else, when we know your specific situation, what your kids, what your spouse does in your business, we can come up with creative ways and ways that are legit and legal that will allow us to expand that travel expense beyond the basic obvious part that we've been talking about. Okay. So means we need to show them salary somehow on monthly basis equals blah, blah. Yes. And so we will, let me look in a couple weeks, I want to say we talk about hiring your kids. We're going to do a whole training on that. Let me look because I know it's not next week. Next week, we're talking about accountable plans. Let me look at my live training schedule. Hiring your kids is October 24th. We are talking about hiring your kids. And so, yes, and that's an area, you guys, that is becoming more popular. We're seeing it a lot on TikTok and Instagram. I'm like, oh, I should hire my kids. And we are going to talk about on October 24th how to do that the right way. All right. And like how it's a deduction, how it's beneficial to your business, but how to make sure you are crossing your T's, dotting your I's, making sure you're doing it right. Because as we always suspect, as things become more popular and tax strategies become more popular in implementation, we're going to assume they're going to start to get more audited as well. So we want to make sure we're doing it right. So if we do get looked at, we have our ducks in a row. All right. Let's see. Your documentation question I will come back to. Okay. Okay. So travel. Okay. Another way, you guys, to maximize travel is to, when you're going out of town, is to run a per diem rate. Right? If you guys have heard of per diem. So if you have employees, if you have, and they are traveling, they're going places, you can give them a per diem, which says, okay, based on where you're going, $50 a day, 100, whatever amount per day is what we can give you, right? To pay for your expenses. And what you can do as a business owner is you can take the greater of actual or per diem. You can do this, your business, okay? So what I'm going to tell my business owners out there who are traveling, all right, let the business pay for all your travel expenses, all right? Then each quarter or each year, depending on how often you want to do this, how often you travel, you or your bookkeeper, if you have a bookkeeper or an administrative assistant, they can look this up. They can look up the per diem rate for the trip you took. And if the per diem is greater than your actual expenses, they can make a journal entry and deduct the rest of that. Okay. So it's a way to maximize your travel expense. All right. If per diem's less, no harm, no foul. You took the actual expenses for your trip. But if your per diem is greater, you can essentially pay yourself, the difference and deduct it. All right. And I already mentioned this, but I am going to mention it one more time, that food and dining still needs to be broken out because it's only deductible at 50%, even when you're traveling. All right. So what I like to see on the books, whether you're using QuickBooks or you're using Xero or any of the other softwares out there, Wave, FreshBooks, or even an Excel spreadsheet. What I like to see for clients that have travel is I want to see your travel line with your airfare, your everything non-food related. Okay. And then I want to see a travel meals under that. Okay. I don't like to see travel meals bolt in with with all your other meals, because then I fear that you have some meals hidden in travel because everybody eats while they're traveling, right? That's a personal preference. If you have a bookkeeper or an accountant, that's a question to ask them. How do they want to see it? All right. But what I like to see on my clients when we do tax returns is travel with all of your non-food items, a subcategory of travel meals that has your travel meals, and then your normal meals. And we talked about this last week. So if you weren't here last week's training was all about your meals expense. Okay. So then on a separate line item, and I put it above because alphabetical order, you have meals 50%. And then you have a meals 100% because there are a few loopholes for 100%, not when you're traveling. Okay. Okay. So that's qualification. Qualification is the biggest part because it's really, like I said at the beginning, this strategy, if you will, is really about understanding what you're allowed to do and making sure you're stretching that, right? You're making sure you're taking advantage of every dollar that we can move from that post-tax bucket to this pre-tax business bucket. All right, so that's qualification. So I'm going to peek at the questions. I think I answered them all. Because how do we keep documents for client meetings? We're going to come back to that because documentation is next. Family expenses. Let me know if I missed anything, but I think I got those. Okay. So qualification check. Next is documentation. All right. And just like I say with every expense, with your meals, with your meals, like I said last week, is you want to keep your receipts. Okay, you want to keep your receipts. And I will always caveat with, yes, I have passed an audit based on bank statements. All right, I have had clients pass audits with no receipts in hand based off bank statements. But it is not how the IRS says to do things. All right. And it's not, and I've heard of people losing audits. So I think it comes down to who the agent you get. So I'm always going to recommend to you guys that you keep receipts for all your travel, for all your meals, for anything that you pay out of pocket that you need to be reimbursed for, and that's a whole different subject. So keeping it with travel. All right. And this is super easy. I do not, for the love of all that is here, I do not want you to have a file folder with crumpled up receipts in it. All right. I want you to use the technology in your hand. All right. And keep everything digitally. All right. So if you use QuickBooks or Xero, maybe some of the other ones, those are the only two we use with our clients. You are able to have an app on your phone, a QuickBooks app or a Xero app. And when you are out and about, you can take a picture of your receipt and file it away into your QuickBooks or attach it to your QuickBooks or your Xero. And if you have a bookkeeper or if you do the bookkeeping yourself at the end of the month when you're reconciling, you can take those receipts from the file, all right, and attach them to the transactions they belong to, all right? And you never have to look at them again. Unless you get, but you know that you have the documentation piece if the IRS ever comes to knocking. All right, because like I said, documentation is where you can, I don't want to say get in trouble, but even if you do all the work to make sure, the qualifying, you're like, yes, this is business, and you're doing the thing, right, to save yourself on tax dollars, you've got to make sure you're keeping the documentation so that if the IRS does question anything, you have receipts. Right? You can be like, yep, this is it. Okay. So I always recommend you keep receipts. That said, if you forget, right? If you lose a receipt, if you forget to take a receipt, that doesn't make that transaction non-deductible. Okay. If it had a legitimate business purpose, keep it. Like it's still good. You still get to deduct it. Right. I would just put more detail in your supports as to why you don't have the receipt. All right. But documentation, so keep the receipt, and I always recommend using QuickBooks or Xero because with QuickBooks or Xero, that software is going to record the when, the where, and the what. All right, which are three pieces of support that you have to have in order to satisfy an examination or an audit. Okay, because they're going to ask, when they're looking at your travel, your meals, if they're whatever they're examining, they're going to want to know when, where, what, who, and why. All right. And if you have QuickBooks or Xero, it takes care of three of those: the when, the where, and the what. All right. This is also why I recommend you don't do anything with cash, because cash is easy to forget about, easy to not document, so many things. All right. So even if you are bad about keeping receipts or you forget a receipt or two, if you're using a credit card or a debit card or any ACH, even anything that goes through your bank directly, not cash, right? It should give you at least the foundation for your documentation requirement. All right. So what's missing after QuickBooks or Xero tells us the when, the where, and the what? We're missing the who and the why. So that's what we want to keep in the memo. All right. So we want to say who, if we met with someone, right? If we met with a vendor, we met with a client, or, we went to a conference, who did we meet? And then why? What was the purpose of us going there? All right. So QuickBooks tells me that on July 31st, I spent money on an Airbnb in Florida. Okay. So I'm going to say I was there because I was at a conference for scaling new heights, whatever. Okay. So I'm going to add the who and the why. If you have a bookkeeper, this is something they can do as part of the reconciliation every month. they can go through your travel and your meals and make sure that the support is in the memo. Because ideally, guys, we want everything we would ever need to give to an IRS agent in one place. And that can be QuickBooks or Xero, because it will have all the information that comes from our bank feed. We will add the who and the why. So all the information is in the line item on our P&L, right? And then we have a copy of the receipt attached to it. All right, so we can make this super easy. All right. So documentation, how do we keep documents for client meetings? Do email evidence will work in that case? For client meetings, yes. So what I usually, like I said, if you in your Xero, your QuickBooks, even your Excel spreadsheet, you say I met with, let's say I met with Joe Smith and he's a client. Okay, that should be suffice. You don't have to have details about what you talked about. If you want to keep those, if you want to attach those, great, even better. But I've never had to dig down into like, why did you meet? How did like, what were you talking about? The specifics when it comes to traveling for a client meeting or a vendor meeting. All right. Is it compulsory that your company name should be mentioned on the bill, or traveler name is fine? Traveler name is fine. Again, I've never seen. So I'm guessing you're talking about when you say mentioned on a bill, you probably mean like on a hotel invoice, right? And the key here, you guys, and I want to emphasize this. So again, if you're doing something else, if you're multitasking, come back to me. When we run a business, whether it's our full-time gig and it's all we do, or it's a side hustle, maybe we have a W-2 job and we have this side gig on the side that we're trying to make extra cash or trying to build a business, we should always have a separate business account. Okay? Always, 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 always. There is no exception to this. All right? There is no reason you should be on a normal basis using your personal bank account or credit card for business expenses. All right? Tough love, but that's what it is. And if you are an S corporation, a C corporation, an LLC, and you do not have a separate business bank account, or you do, and there is an abundance, but there's an abundance of crossover, all right, you are what they're called, they say piercing the corporate veil, all right, and you're essentially negating that separate entity that is created to keep you personally separate from your business. All right. So every business should have its own business bank account. All right. Hashtag not an ad, but Relay is amazing. It's free. It's online. It takes 10 minutes. I will put the link. I can put the link to open a Relay account in this chat. Super easy. All right. So have a separate account. Use that for all of your business stuff. I get sometimes you're out and maybe you forgot your business card. Maybe you didn't plan on spending business money, so you didn't grab it. There are exceptions. There are times where we make a mistake, we go out, we have to put it on our personal card. I get that, but it cannot be a normal practice, right? If we pull 100 transactions, 90 or more of those need to be in the business account. They can't be in your personal account, okay? So I went off on a tangent, but the whole point is like, does the company name need to be on the bill, or is the traveler's name fine? It doesn't matter as long as you're paying it all out of your business account. All right. So that is the documentation piece. So finally, it's the reporting. And this is the easiest of them all. All right. Because if you're using QuickBooks or Xero or anything, I use those two, but again, any software, you're going to have a travel line item on your P&L. All right. So it's an expense account. All of your travel is going to be in there with the exception of our travel meals, which is going to be a sub account. All right. And so that is going to go, your P&L is going to show our travel expense total, right, for the year. And then that number is just going to go onto your tax return. Whether you're a Schedule C or you're an S Corp or you're a partnership, there is a travel line. Right? And there is a meals line. Okay. So it goes in your P&L, and then that number from your P&L goes directly onto your return. And what's great, again, I have clients that are oftentimes hesitant to purchase QuickBooks Online or Xero There are cheaper options, but whatever you choose, the point is that it makes your job easier, and this is part of it, right? If you're trying to do all this in an Excel spreadsheet, maybe you're great with the tables and stuff. I'm not. So I want to be able to just pull my P&L, see my travel line, click on it, and see all my transactions for travel for the year, right? And that's what QuickBooks Online or Xero or a platform allows you to do, okay? It saves you tons of time, right? So reporting, super easy. Goes on your P&L, directly goes onto your tax return. That's it. There's really no way to screw up the reporting except bearing meals, travel meals into travel, all right? That is where you could get in trouble with reporting, because if you were to get audited and they look at that travel and they request some transactions and they see meals are included in that travel, they're going to go through all of your travel expense. They're going to take out all of your meals and they're going to make it 50% deductible because that's what it should be. And you're going to end up owing some money and probably some penalties and interest. All right. So that is the only way that you really can get in trouble on reporting, is if you don't break out those meals. Okay. Or if you happen to pay for maybe some of your families on the business, you don't then go out and take it out of your P&L. Okay. So cool. So qualification is where we spent most of our time, because that is where most of the ability to really utilize this strategy lies. Documentation is the important piece, in that we want to make sure our documentation is in place so that if we ever do get audited, it's a breeze. Reporting is the easiest step. As long as we break out our travel meals, there should be no problem with our reporting. All right, so next week, you guys, we're talking about accountable plans. So accountable plans are for partnerships and S Corps and corporations. So if you are a Schedule C business, if you're a sole prop, a single member LLC, next week, take the week off. But if you are an S Corp, a C Corp, or a partnership, you absolutely want to join us for accountable plans. And something new we're starting on Monday. We are starting Money Monday co-working sessions. You'll see it posted on Facebook and LinkedIn. So if you're watching on YouTube, and make sure you go either follow our business on LinkedIn or follow it on Facebook, or join our Facebook group, Money, Taxes, and Finance. I think that's where we're going to end up doing our co-working sessions, is in that Facebook group. But what's going to happen is every Monday at 10 a.m. my time, Mountain Time, so 9 a.m. Pacific Time, 12 noon Eastern Time, for an hour, we're going to come together. The first 5 minutes, we're going to set our goals. We're going to work for 15 minutes uninterrupted, and we're going to spend the last 5 minutes celebrating what we got accomplished. All right. And we're doing Money Mondays because nobody ever wants to look at their money. I'm going to come with a checklist for you guys. If you really have no idea what to do, with, looking at your money and dealing with your money, I will bring you a checklist of things to work on, or things you can do, and we're going to get things done. All right. So yeah, if next week, I'll see you at training. Hopefully I will see some of you guys on Monday at our Money Monday co-working session. I went way long today, but hopefully you guys got good stuff out of it. So have a great weekend, and I will see you guys next week, either Monday or Thursday. Thanks. Bye.